So Mark Zuckerberg had his first public appearance since the disastrous IPO of his company Facebook. Yesterday he appeared in San Francisco at the TechCrunch Disrupt conference, and the stock and the market seems to like what he had to say. There were a couple things. Let's try to unpack it. Rob, what did you find what do you think investors actually liked? Was it just the fact that he looks buff from his vacation, all the raw meat he's eating?
It was the fact that he seemed a bit confident, actually. Yeah. I mean, he's known for being very introverted and very kind of nervous when he's appeared on stage before. And Facebook had a lot to prove, and he came out and he sold a pretty convincing story.
Right.
A couple of things he said. First was he said that its biggest mistake was they bet the farm on HTML5. To me, in English,
okay, so put that into not geek speak, but in English.
To English, what that means is they bet on the web rather than apps.
Right.
If you think about it, you get your mobile phone, and they wanted to make a program which would work across any phone.
So that speaks to one of the big problems they've had, which is persuading people they can make money out of mobile.
Yeah.
Right. Mm-hmm. And that you pointed that out early on, but that's one of the reasons the stock has come down.
Of course, people like Roger McNamee at Elevation suggest that the next step is going to be HTML5. I mean, in other words, after we get past the app economy, we get to the HTML5.
Well, I mean,
one.
Facebook said, we've tried it out, and it just didn't work that well.
Right.
But so they started rolling out apps. So they rolled out the one for iPhone, and now they're rolling out an Android one.
Maybe it's the fact they like him actually admitting some mistakes.
Yeah, I think he seemed a bit more human. And then,
but I mean, let's just put this in a little bit of context. The stock's up 5-6% this morning.
It's
still $20 and change. Yeah. The high is over 40. The IPO was 38. So it's not like anybody who bought or got given stock anywhere near the IPO time is going to be happy right now.
Because the story we're putting out today looks at that issue, because one of the things that Zuckerberg said was that he basically acknowledged that it certainly hasn't been good for morale to have this disastrous IPO price. But it's actually more than that, which is, the problem is they have awarded tons of stock to people,
lots of stock, yeah.
and at prices much higher than the current market price. So, for example, in November, I think 2010 was the last time on second market, the company traded at around this price.
Yeah, that was in the gray market before.
Gray market, right. But that would have been used to set the price of restricted stock.
And Facebook
not
was a much smaller company at that point.
Well, it was 1,700 employees. Today it's 4,000. That means 60% of the company's employees, assuming they all got equity. Now, maybe they all did, the janitor and whatnot, although it seems to me they probably did get a lot of it was equity compensation, would be below the high water mark.
And those guys are poorer than they expected when they
they
hoped they'd be rich by now, and actually they're poorer.
Yeah. Right.
A little bit.
Right. They're a little poorer than they thought. And so that the problem that creates, of course, is that you have morale as a problem. People can leave. It's easier for rivals to pick them off. And I suppose...
Or the alternative, as you point out, is to issue people a whole bunch more stock, which dilutes everybody else, which isn't good for the other shareholders.
Right. Okay. Well, good. We'll wrap that up, and we'll be back with more Breaking Views tomorrow.